I love all the chatter in the chat. We appreciate you guys so much for coming again. We're gonna get started here. We are so appreciative of your time today. So we just want to thank you so much for joining us today. Thanks so much for letting us know where you are in your journey. We want to support you all throughout your journey here at Trusted. I am Britt Greaves. I am the community manager here at Trusted, but I have been a nurse for 10 years. As I alluded to, I traveled for about 5 in a ton of different specialties, in a ton of different things, in a ton of different places internationally, all over the place. But now here at Trusted, I have the honor and pleasure of leading community, which I get to do really awesome things like collaborate with people like Joseph to bring you all information and education on some of the things that I honestly wish that we had in the game when I was traveling. So here at Trusted, we really honestly just want to be a wealth of resources. We have a ton of blog information on taxes, finances, mental health. We have a ton of different resources on getting into the game and how to stay in the game, how to get different certifications and things like that. So we just really want to be that knowledge base for you all through events like these, educational ones. But then we also have really amazing in-person events. So if you guys are stay tuned with us, please look out for Nurses Week events, for Allied Week events. We always have something going on. So definitely make sure you stay tuned with us. We are a travel nursing agency that places nurses and allied professionals in all 50 states. Yes, you heard it. We do allied and nursing. So if you have RT friends, surgical tech friends, send them our way. We love travel nurses. That's my heart. So we are just a wealth of knowledge here, and we want to continue that. We are so appreciative for you joining us today. A little bit about the platform, because I know this platform may be new to some people. As we are already getting the chat warmed up, I love to hear it, and I love to see all the people. I did want to point out that we do have a Q&A section as well. I already started that, so feel free, if you have those burning questions that you already know that you want to ask Joseph, or throughout the presentation, you're like, hey, this is just like kind of on my brain, feel free to go ahead and drop that in the Q&A. There's also going to be an upvote. If somebody asks a question that you have, just go ahead and upvote that, and I'll flag that to him, and we'll make sure that we get those answered quicker, because obviously more people want to get that answered. Feel free also, if you want to raise your hand, if the question is just a little bit more, harder to type or anything like that, feel free to raise your hand as well. We'll get to you. We will have a Q&A section at the end, so don't feel like we're not going to answer your questions. We will. Don't you worry. That's why we're here, to ask a travel tax expert. So don't fear, don't fret. If you do have any trouble with hearing or audio or visual or anything like that, one of the things we do suggest is going out of the event and coming back in. There's a little button that you can test your audio and visual if it isn't working or it's kind of, lagging or anything like that. Feel free to just do that, come back in, refresh, maybe use Google Chrome, maybe use a laptop, whatever. But either way, you're covered. And then if none of that works, feel free to DM me. I'm going to be here the entire presentation. But also there is a little help button. There's a little question mark to the side there. You can actually get Bevy support the entire time we're here if you're having any of those issues or trouble throughout the presentation. So a little bit about Trusted, a little bit about me, but also about the platform. We will be recording this event again, like I said before, and sending it out to those that RSVP'd. We want to make sure that you have the information, whether you're on or off shifts, or maybe you just want to look back at the slides. Don't worry, I'll be sending an email, so make sure you just are, still in your email so I can get you that information. And throughout all of this, I'm here, Joseph's here, and without further ado, let's get into it. Thank you guys so much for joining. Joseph, take it away.
Well, thank you, Brett, and thank you for all of those that are joining, and I bet there'll be more coming in as we continue on here. And like Brett said, if you have a problem hearing me, make sure we know so we can take care of any technical issues. So you're joining us tonight for a tax talk. And this is probably one of those kind of sessions that can bore you to tears and excite you to tears all in the same one. But you are in a unique world now. You're no longer working in one hospital, or you're contemplating going elsewhere. And when you start working in multiple states, have multiple W-2s, the challenges are pretty self-evident there. You'll have plenty more issues of tax filing. And the goal today is I'm going to give you a high level view of what you have to deal with. There is a lot more that I could say about each of these individual topics that we cover, but I want to try to give you sort of the basic understanding so you have a lot more comfort. And a little bit about myself. Uh, I was a double major respiratory therapy and accounting way back in the 80s. I'm dating myself. And when I finished, I decided to go travel as an RT. And I'm a South Carolina boy originally. And the very first assignment I ever did was in northern Minnesota in the winter. Uh, Always go someplace that's out of your comfort zone. You'll walk away far more enriched, and especially if it's a weather wonderland like that. I learned how to use block heaters and walk on frozen lakes, and for a South Carolina boy, that was quite an incredible journey. But as I continued to travel, I started picking up coworker tax returns. So about 1991, I started doing a bunch of these by hand. And later on, I began writing for an old publication called Healthcare Traveler that is no longer in existence. But I started to gather tax clients along the way. Um, and eventually I went national with TravelTax. And we've been in business for over 23 years. And very specific that when I started it, I wanted to focus on the healthcare traveler. But there's travelers in a lot of other industries. Engineering, we do professional sports players. You name it, it's all multi-state or cross-border international. I don't want to bore you with too much of my background, but I have my feet in both worlds. I'm on the Industry Trade Group Tax Compliance Committee, which is a association of agency executives. I have done expert witness testimony and written Supreme Court Ninth Circuit briefs for agencies. But for our travelers, we like to see ourselves as advocates because this is, like I said, a very new world for you. And if you've ever been to the Travelers Conference in Las Vegas in September, I was one of the original group that helped get that started. And I have two adopted boys that are big enough to be bodyguards. If you ever meet them, one lives with me still and just went off to the gym. He's a gym rat. Brett, if you can go down to the next slide. This is what we're going to cover. And it's going to be somewhat lightning fast. I'm going to go over the biggest one that you probably have the questions on. That's what is a tax home? Then I'm going to briefly cover what multi-state tax looks like, and then go over some basics like extensions and deductions and those other kind of things that we run into along the way. A tax home is probably something you have already heard a lot of information about. And I know you're going to have questions along the way. And as Brent mentioned, get them in the Q&A section because we'll be able to answer them very quickly once we see them. But what is a tax home? And a question should also be asked, what is it not? A tax home is very confusing because it's not the same thing as a permanent residence. So how is that different? A permanent residence, if you pull out your driver's license, your car registration, voter registration, that gives you a legal connection anchor to a particular community. But that does not make a tax residence. A tax residence is more what we call a money home. And the definition of a tax home under the tax code is that it is your main principal place of work, business, income. In other words, where is it that you regularly make your income? And for most people who have the one job or one main job, that's a very easy question to answer. It's wherever they work, that commutable area that they work. It doesn't matter whether they drive 25, 50, or 200 miles to go to that one main permanent job. Wherever they work, that is their money home, even if it's separate from their permanent home. Now, this is where it gets a little confusing because in the travel world, typically we don't work in the same place all the time. We are, as one person would put it, in constant motion. We probably make our friends dizzy when we tell them where we have been. When I traveled, I worked in 9 different cities, and every time I would come back home, they said, well, wow, you took a long vacation. I didn't take a long vacation. I just got done working for assignments 3 months at a time all over the nation. So when you ask this question, where is your regular place of work, you really can't answer that because you are in this constant travel status. And that is where the tax laws come in and provide an exception for the mobile professional. And like I mentioned, mobile work is predominant not just in healthcare, but in engineering. You got traveling salesmen, you got people that help install new equipment, or even the managers in restaurants. They go from new store to new store to new store. So you have a lot of company out there. The workforce is mobile. And that's an important thing because the economy needs to run on that. So the tax law comes in and says, all right, you don't have a main place of work, but do you have expenses in maintaining your primary home, your dwelling, the sticks and bricks shelter that you keep? And if you do, when you are away from home, now you are typically duplicating those expenses of your main home and your home away from home. And this is where the tax laws provide an exception. They say, all right, you don't have a regular place of work. So if you are forced to duplicate your home and your lodging expenses in the form of your main home and your home away from home, then we will allow you to be reimbursed for that second residence on a tax-free basis. And this is where, as you are onboarding for your assignments, the per diems, the stipends, the meals, the lodging, that is all part of the reimbursements that you receive for maintaining or having to secure a second place of lodging so you can fulfill your duties. Now you notice you either have a main place of work or you are working in so many different areas that you wind up duplicating your expenses. But what if you don't have a main place of work and you don't maintain a home? If that is the case, because you're not duplicating, neither do you have a regular place of work you return to. If that is the case, then all of these per diems and stipends become taxable, just like wages. And that's very critical, and it's why when you hear this conversation about what a tax residence is, it becomes very important because it's going to determine whether or not those stipends and per diems are available to you on a tax-free basis. And there's a lot of shenanigans out there regarding this. One of them is the 50-mile rule. There is no such thing in the tax code. Now, you can use a 50-mile rule as a great disqualifier, but 50 miles only rules only prove that you drove 50 miles. It doesn't prove the central point. And the point is you have to have the housing expense away from home to reimburse. So when somebody asks how far do I have to be away, the answer is far enough so that you have to get rest and sleep at the assignment location because it's too far to commute. And because you have that second home expense, or you have that expense in addition to your main job, you can receive the housing and meal reimbursements on a tax-free basis. Now, your main home is either in the form of a mortgage, rent, or if you rent or share expenses with a relative, you can do that as well. But you have to make sure that that relative, that you're treating them like a non-relative when you start looking at how much rent and shared expenses that you are going to pay. It can't be a token amount, because then that is not a financial burden. You can also, as I think Tiffany has already asked here, can you stay with a relative where you are working? Yeah, you can do that too, but you can't live with them rent free, because those reimbursements, the per diems, have to have something to attach to. And if there is no lodging expenses, then the per diems, regardless of what they are, then become taxable. And you need to pay reasonable amounts for the lodging away from home. Now, you also hear about certain limitations. One of those limitations is the 1 year rule, the 12-month rule. And this brings a source of confusion in our industry too, because a lot of times you may find a place that you really like. And the question arises when you hit that 12 months, how long do you have to get away from that area before you can come back and still be treated as a traveler? Some agencies mistakenly say 30 days. 30 days isn't going to change anything, because chances are you've already signed that extension before you finished the previous assignment. So that's just premeditated beyond 12 months. The IRS attorneys, there is a chief counsel recommendation, and you can find these citations on our blog. You can just go to our website and link to it. They expect a 7 to 12 month break in between assignments in the same area, so as to avoid the 12-month rule. Why is there a 12-month rule? Well, if you go back to the very beginning, a tax home is a regular place of work, not where you live. You want to keep from creating a regular place of work because you keep taking assignment after assignment after assignment, or frequently on a regular basis in the same area, because then that will become a tax home. So if you've been in a place a year, you need to go away. And the guidance we give our clients is no more than 12 out of 24 months in the same area. So you got to be careful of that. And if you go back to the same place 3 years in a row, well, you just created a seasonal assignment, and you want to avoid that as well. Now, I'll just throw out two other little limitations before we move on to the next topic. And that is, well, what if I own my home? Can I rent it out when I'm on the road? The answer is yes, but you can't displace yourself. In other words, you can rent it out on a vacation basis, or you can rent it out proportionally. In other words, I have my bedroom, I rent out the other 2 bedrooms or a second bedroom. And that's a great thing to do, especially if you know the people. Because if you have like a 3-bedroom condo or home and you go travel, it's really a dead asset, even though you're having to pay for it to get the tax-free per diem. So if you could get some income out of that, even if it just takes care of 2/3 of the house or 1/3 of the house, then you're doing yourself a great favor, and that's a savvy way to approach it. The other limitation I mentioned is RVs. RVs make great second residences, but if it's your only residence and you take it with you, well, you don't have a second home, and you can't say that a vacant pad or vacant land is a means of duplication of expenses, because you have to duplicate a dwelling, not a vacant area of land. So there's a couple of questions here, two others. Kay says, I do not have a tax home. I travel full time, keep all my belongings in storage. So is my tax home considered where my storage is located? No, because storage units are not residences. Even if some storage units are in gated communities, they're not residences. Do I have to declare a tax home? Your tax home in this situation, if you're not maintaining a primary dwelling, your tax home is wherever you work. Now, you bring up an interesting thing that I'm going to cover in just a second. Your permanent residence is actually where you file your resident state return. That's dictated by your legal ties. But for tax home purposes, your tax home is wherever you're working. And another question, is it possible to argue the 50-mile rule regarding stipends with an agency? Issues in the past, explaining to them that it's commutable. And, that's a good question, and that is good due diligence on your part. Yeah, we do deal with agencies in this industry, and there's over 400 of them that, they could step up their compliance, and you have to protect yourself because your tax obligations have a higher threshold. The thing that you can do with that is when you file your return at the end of the year, you can always add the stipends back. And we do that quite a lot with some clients that have difficulty getting the agencies to treat it that way. And since some of the court cases that have been in play in the last decade have resolved, there are more agencies that do not cater to travelers who do not have a valid tax home. So you'll run into that occasionally. One other question before I jump to the next topic. Do you have to stay at your tax home 30 days out of the year? Yes, you need to. You cannot abandon your home. You need to come home. And some old IRS documents have a 30-day suggestion in there, and that's generally what we will follow. 30 days a year, and if you miss it one year, we'll go home 60 days the next year, so you can see a pattern over time. And the rest of that question is, can I just pay rent there and visit between contracts? Well, yeah, you do not have to go home 30 days consecutively. You can stretch that out over time. Now, the next topic we're going to go to is multi-state. And since we have this one slide here, finding a travel tax professional, I'll give you a big answer to this. You want to find somebody that's comfortable with multiple states. The average tax prep professional, especially in the chains, only deal with their one state, maybe a border state. And they generally don't ask the questions that you need, like with tax home issues or staying in one place too long. You need somebody who deals with truckers is probably even better with this than the average one. The chains cater to the easier tax returns. You have your person with a primary job, spouse, kids, home. That's where their main focus is. But the biggest danger that we have to correct is a lot of times if you go to a chain prep office, they're going to make you a part-year resident in every state that you work, and you do not want that because that's driven by your legal ties, and if you have a compact license, you're jeopardizing that because you have to file as a resident. Brett, if you can go on the next slide, there we go. So when my life gets complicated and I wind up working in all these different states, how does that affect my taxes? Well, it means you got more state returns. We can tell that. And how does that work out? I mean, if I live in, let's just say, North Carolina, and I go and I work in California, well, am I going to get double taxed? The answer is no. You're going to report all of your income to the home state. You can't get out of that. And you're also going to report the income you earn in the work state. Now, at first, it seems like you're double taxed, but you're not, because your home state, North Carolina, in this example, is going to credit you for the tax that you were obligated to pay to California. And when I say obligated to pay, that is the tax that's determined by the filing of your tax return, not the amount of withholding. So let's just say, for this example, North Carolina, and it's a flat 4.5%, and you work in California and the tax rate is 6%, you're not going to owe anything to your home state on that income because the work state had a higher tax. But let's say you live in North Carolina and you go to a state that has a very low tax, like Arizona or North Dakota. Well, because your home state has a higher tax, you're going to have to make up the difference. You fill the gap, so to speak. And that can either be done by the agency double withholding, in other words, reporting to the home and the work state, or you wind up making extra payments during the year, or even you can wait till you file to do it. But if it's a large amount, you don't want to make a habit of that. Now, that is the way normal multi-state work is structured. But as anything that we have out there, there are going to be exceptions. A number of states have border state reciprocity. So if you're, say, a Kentucky resident, almost every state you work in on the border, you're only going to be taxed in Kentucky, not the other states. And there are peculiar arrangements between California, Oregon, Arizona, all those West Coast states, and Indiana and Virginia. It's like a 5-state weird compact. So you do have your exceptions. And then for some of you, it doesn't stop at federal. It doesn't stop at the state tax. You also have local taxes. That's especially true for any of you that work or live in Pennsylvania, Ohio, Indiana, Maryland, and then to a great extent, Michigan. St. Louis, Kansas City, New York City has a municipal tax that you wind up paying on top of that. Now, when I talk about these things, we get a lot of questions about what are the best states to be a traveler from. And that would be the 8 states that don't have a tax. And most of them are compact states if you're a nurse. And without giving you a graphic on that, those states real quickly are New Hampshire, Texas, Tennessee, Florida, South Dakota, Wyoming, Nevada, Washington State, and Alaska. Now, the territories, if you're from Guam or the Virgin Islands, they don't have a state tax. So they would function in the same way. And if you ever work in the District of Columbia, they can't tax a non-resident. So if you happen to be from one of these states that don't have a tax and you just want to focus on those states, and I got clients that do this, DC is part of it. And if you go work in Minnesota and make less than $13,000, they're not going to tax you as a non-resident. But then you got to ask the other question of what are the worst states to be a traveler from? Those are Indiana and Ohio, and let's throw in New York City. And why is that? It's because you have a strong potential of being double taxed because those municipal taxes, there's no way to get a credit unless you go work in another municipality, another area that has a municipality tax. Um, so let's see. Before I go on from that, let's see if there's any other questions over here in the chat box.
There's
Um,
there's a few from the other chat. Let me just float them to you. Someone asked, I was just asked by an agency to fill out an 8850 form. What is the purpose of this?
is that a tax form that you are? I'll look at that real quickly. That is an 8850 is for the work opportunity credit. That's when you have a disability or you are in a specialized category, like a returning veteran, uh, that they would be able to get tax credits for employing you. Uh, so I don't know exactly why that is, unless that's a if it's a federal form, a tax form, that's what that is.
Okay.
So yeah, that needs a little bit more explanation because I've never seen that. I got 40 employees, and I do have some that I fill those forms out for, but typically you don't find that in traveling.
Okay. And then one other one in the chat is, what is the best form of payment to show proof if ever needed when sending rent to a tax home? Cash, electronically, etc. And does the statement have to show what the payment was for?
Never cash, and we're all medical professionals or ex-medical professions. If it's not documented, it never happened. So if you give cash, there you want a third party involved. So bank, PayPal, Venmo, all of those are game. And yes, it's good to say what it's for, even if you write an old-fashioned check, rent, or that's really the best word to use. And that's important because a lot of travelers say, "Well, what kind of record should I keep?" The big one is keep a paper trail of your payments for your main home and your work home. If you're ever in an audit, and one of the things they're going to look at is proof of expenses. And we've done audit representation for 25 years now. And the auditors tend to be a little skeptical. So the more documentation you have showing that here's my main home, here's my work home, the better off you'll be. Uh, and Brett, I see another question up here. When you say the same area, does that mean the same state? No. Area, commutable area. If you live in DC, you can commute to Virginia, Maryland, Pennsylvania in some respects. It's whatever the typical behavior for that area is. Um, there's lots of border states. So it's not limited to a state. There's no limit to zip codes or anything like that. If you can commute, it's the same area. Uh, uh, Carla wants okay, yeah. So, and the example of what I call, we have a term in our office called orbit nurse, and we'll have some clients will say, be a travel nurse, not an orbit nurse. What's an orbit nurse? It's somebody who likes working in the same area constantly, and they're just going in circles. The classic example, I'll go to Oakland, then I'll go down to San Jose, and I'll come back up to San Francisco and repeat the process. Get out of the Bay Area because after a while you're going to run afoul of some state rules about residency. And then there's another one over here in the Q&A. It looks like no, the answer. Oh, here we go. Thinking about applying to a per diem job, 4 shifts a month in addition to traveling. I'm seeing job postings in a different state from my tax home that I'm interested in. Can you explain the key difference between a temporary travel assignment versus internal per diem? If you're taking a per diem job and you go there 4 shifts a month, that's a permanent job for this purpose. because there's no end in sight. Temporary jobs are ones that have an endpoint. And to be even more specific under the tax code, a temporary job is something that lasts less than a year. So when you take a per diem job, that is assumed to be a permanent job. Now, just working a few shifts a month shift your tax home? No, but at the same time, you can use that strategically to make it a tax home, because if you work in an area, the money speaks often louder than duplicated expenses, because the main definition of a tax home is where you work, it's not where you live. So you're riding on a prayer, so to speak, when it's the duplicated expenses, because that's an exception to the rule, not the rule. And if you maintain a job and go back to it, that's really strong. But I did that when I traveled, but I'll be honest with you, less than 5% of travelers are able to do that. Fortunate if you can, because hospitals don't like you being gone so long that you just sort of lose your way around and have to be reorientated every time you come back. Another question similar to this that we get a lot is, can I have a per diem job on the side during travel? Well, you can, as long as the per diem job's not the main job. That is something, on the side, incidental to the fact that you're there for a temporary job. Another question, if I work in one state and the agency is in a different state than I'll be working, my tax, the agency location is irrelevant. It's home and work. The only time the agency location might be relevant is what Britt is doing. There are a couple of states that have convenience of the employer rules, and that's the two big ones are New York and Nebraska. If you are working remotely for a company that's located there and they don't need you to be where you're working from, then it's taxable to that state. And Omaha has about 35 staffing agencies, and there are a lot of recruiters working remotely being taxed by Nebraska, even though they live somewhere else. So that's a good question. That's a big area of multi-state tax that is still evolving, if you will, ever since the pandemic. Another question, if you're working a contract and a per diem, are you allowed to write off deductions from the per diem even though you have a tax-free stipends? Now, this brings up an interesting scenario. Job expenses for a W-2 job were suspended in 2018. They will come back in 2026. So that means your scrubs, your uniforms, all this stuff, transportation, lodging, meals, for you to write that off as an employee, you can't do it. There's a handful of states that still allow you to do that, but that's another long topic. If you are an independent contractor, which most of you are not, that's a different answer. The answer to that is yes. But let's take this same question a little further. Let's just say you could deduct all your expenses. And the question is, can you deduct expenses even though you have tax-free stipends? It doesn't matter whether the tax-free stipends came from agency A or per diem agency B. If they are reimbursing you, regardless of source, you can't double dip and deduct more. But let's say you have a 1099 independent contract and you're an employee and you're getting tax-free per diems from the W-2 job. Well, you can't double dip from the 1099 perspective. Those of you that know what I'm using a lot of lingo there. But you can't double dip regardless of the way you look at it. Let's see. Is there a 50-mile rule for local travelers? I'll tell you where that also comes in, and it's not tax related, it's facility related. Facilities, typically, when I say facility, I mean hospital. And the nomenclature here, the vocabulary, your agency, the hospital is their client. To us, the hospital is where we work. We are providers. Those terms are very much inside your contracts if you ever read them. But is there a 50-mile rule for local travelers? The hospitals don't want people who live close from getting per diem or premium pay. So if you're negotiating a contract, let's forget the tax side of this. If you were closer than 50 miles, that hospital may not pay travel pay. They may pay local pay, or they may not even have you at all. So there's a facility threshold in there that a lot of people confuse with a tax threshold. Because, well, if I'm more than 50 miles away, I get per diem. If I'm closer, I don't. So they think, okay, that's a tax law, but no. Receiving it is not the same as whether it's taxable. If you receive it and you're commuting 52 miles, well, you don't have any lodging expenses to reimburse. So the fact that you got it doesn't mean anything. It's taxable because you didn't have an expense to anchor that to. And another follow-up question, double dipping. Basically, you can't deduct something for which you were reimbursed. So if my North Carolina nursing license, I had to pay $100 and my staffing agency reimbursed me, I can't deduct that same cost for another job, whether it's an independent contracting job or not. I got reimbursed, I've been made whole, I can't turn around and use that and double dip. Go ahead, Brent, and go down to, I'm just going to cover sort of some, real quick things here. One thing I should say, a lot of people ask, what's a per diem? And the short answer is that a per diem is an allowance that's given to you for lodging and meals. And the question often arises, do you have to spend all of it? The answer is no. The per diem functions as a receipt so long as it's within the GSA guidelines. And a lot of you, by the time you've traveled one assignment, usually you know what I mean by GSA. Basically, the human resources arm of the government has amounts that they allow for government travel. And any private sector employer can use that as the basis of their reimbursements for lodging and meals. It's sort of a cost of living index. And as long as that per diem does not exceed that, no receipts are required as long as they've done the tax home due diligence on you. So if you get paid $1,000 for your per diem for lodging and you spend $500, well, you keep the difference tax free because the per diem is treated as the actual receipt in that case. And that is how you actually make money in the industry. You live cheaper than the per diem. I don't mean eating ramen noodles every day, and they're so full of fat you'll have a heart attack by the time you get done with them. But if you are frugal, you can really take advantage of this. Just ask any trucker. They live off of their per diems. So that's sort of the word about per diems there. I could go on for like an hour about that, but for the sake of time, I won't. Extensions. Now, 50% of our clients are on extensions. And they say, well, why should I have to extend? Because your lifestyle doesn't allow you to get everything on time. Only now are our clients getting their brokerage statements. Once you start investing, Vanguard, Schwab, E-Trade, Morgan Stanley, whatever, you're not going to get your statements until the end of February most of the time. And unfortunately, the tax deadline is now so tight, the IRS gives all these companies till the midpoint or the end point to do all the reporting, and you're on the road. I don't care how electronically savvy you are. Uh, it still takes a while to come to settle in and zone in and pull all that together. So what's the solution? File an extension. And that gives you time to think about it when you're not rushed. I haven't filed my own tax return before October for the last 20 years. I just file extensions all the time. But one thing to say about extensions, they extend the filing time, not the payment time. However, if you owe, an extension gets you out of the worst penalty, and that's the failure to file penalty, and those can be astronomical. For example, if you owe $1,000 to the IRS and you don't file on time, they will charge you 5% per month, up to 25%. If you file an extension, you don't have to pay that. You may pay some interest, but that pales in comparison to the filing uh, penalty. Uh, excuse me. Let's see. Over in the QA, we had two more. So I worked 5 months in 2023 in one place, California, and now into 2024. I have worked until the end of April. Same place, so 9 months total consecutively. If I come back to the same exact place again in June, after a month off, well, I'll be limited as the time I can work in CA. Let's forget the state. It is the commutable area. Excuse me for a minute. You can come back to different geographical areas. San Francisco and Los Angeles are completely different. But let's just assume this is the same area, 5 months in 2023. And we will potentially have another 4 months, 9 months in 2024. So that's a total of 14 months out of 24. I wouldn't push it because in any 2 year window, you're making more than half of your income in the same commutable area. That puts you in danger of a tax home shift. Travel, go someplace else. Be gone long enough before you come back. You mentioned renting out your house while traveling. If you have a 3-bedroom house, lock off a bedroom, rent out the other two, but don't have access to your room during a contract. Is that an issue? If you're going to do a proportional rental, you want access to your room. You want to put in a contract. I can come back anytime and occupy my bedroom. Otherwise, you're displaced. And if you do that all year, you're not going to have the place available to you for that entire year. So now it becomes a business property, not a principal residence. Now, if you just do that for 3 months, like a vacation rental, yeah, you can do that. But you don't want to extend that all the way through the rest of the year. Okay, I think we covered everything that's there. Deductions, and I already covered that. Unless you're an independent contractor, you're going to have to wait till 2026 before you can start deducting items again. For those that are nerdy and like me, like to know all these kind of legislative affairs coming down the pipe, after this next election, you're going to hear a lot of talk about tax because that's 2025 and all the tax rules change again in 2026, or they go back to where they were before the legislation that passed in 2018. W-2 corrections. The thing I got to say about this is agencies are human, made up of humans, and somebody is bound to goof on the states. Somebody's bound to goof on the tax home. And the best thing you can do is every time you start an assignment, look at that pay stub. If you are a North Carolina resident working in Virginia, you should at least see Virginia withholding and reporting on there. If you see both, that's good because you're going to get back any excess. But if you live in North Carolina, work in Virginia, and you only see North Carolina withholding, you need to call because you should at least have Virginia because that's where you're working. And there's all sorts of other little things that can come into play with each contract because your contract outlines your compensation. And if you don't see it on your pay stub, when it comes time to issue your W-2, it's not going to be there. And unfortunately, we have a lot of clients that come and have their taxes done by us. And it's only then that they realize, oh, by the way, your agency did not withhold for Hawaii while you were in Honolulu. Oh, I didn't know that. Well, if you look at your pay stub after the first week or your first check, that would have solved the problem. It is harder for an agency to issue a correct W-2 than it is to fix it after the first pay cycle of that assignment. Now, there's another W-4 that we don't have on the slides, and the W-4 is what you set your withholding at. And the current forms are pretty simple. You just check single and leave it alone. If you're a married traveler, I would still suggest doing that unless you've been through a whole year of traveling and seen the results. There's a lot more lines you can fill out with that. Ignore them. The real big problem with W-4s is every state has their own, and some of them you have to fill out separately. And the most confusing one is Arizona, because every other state goes by your filing status. If you have kids, Arizona goes by a percentage. Put down 2%. If you are doing that, they'll give you like 5 choices on there. Brett, if you can move on to the next slide. I thought there was another slide in there. Let's see, just some random thoughts that are going through my mind right now. Bonuses. Oh, I don't want a bonus on tax tire. That's actually not the case. The reason you'll see bonuses, quote, taxed, unquote, higher, it's not that they're being taxed higher. It's when you get a paycheck, let's just say you're paid every week, and you make $1,000 that week. When that withholding, the amount of tax they take out, is calculated, it's going to assume you work like that all year long. So if I make $1,000 a week, that's 52 weeks, $52,000. So the withholding is going to be what should somebody be setting aside for taxes if they make $52,000 and they're single or married. So that's the formula. But let's say week 2, I have a $2,000 bonus and I make $3,000. And you run it through the same formula. Now it's going to assume that I make $3,000 times 52 weeks, which is $156,000. Taxes on $156,000 compared to the other is a lot higher, and a lot higher in percentage. So when you get a bonus, that's what's going on in the background. Or you work a lot of overtime, same thing. That's what's going on. The withholding tables, the amount they take out for taxes, assumes that that's just how you work all week, all year. And you don't. Some people only work 6 months and then they stop. This is the flexibility of being a traveler. This is one of the reasons it's so cool. You can work all you want or as little as you want. And if you do something like that, you're bound to get a big refund because you've spent 6 months working full time, and all of that tax withholding is assuming you're going to work 12 months, and you don't. So that's why bonuses looks like they're taxed higher, but they're not. And any excess that's taken out for taxes is going to be refunded to you when you file your return. There was something in the chat box here. I think, Brett, that was you saying feel free to drop in any last minute questions there. One thing, while we have time, if you go to our website, TravelTax.com, we have a specialized tax home consult, in which my staff will go over 25 points and look into the future and help you really evaluate this both in the here and the now, here and now, and into the future, so you can maintain your tax home. And we also have a university that has a collection of all of our video and written educational items. Is it question here? Is it better to have a high hourly tax rate, one that matches a permanent job, or a lower tax rate for the package? And that's a question that actually leads us into the dynamics of this industry. The agencies have a bill rate, and then that bill rate has to be split up between their part, then the per diems, reimbursements, stipends, whatever label they put them on, and then the taxable. And the odd thing about our industry, the pandemic was a completely different time. The odd thing about our industry is that often the hospital bill rate is not a lot higher than their permanent staff. They're just working through agencies that provide more flexibility, mobility, and being able to flex the staff to your needs. So permanent staff might make 70 an hour, and they're going to bring in travelers for 85 an hour. There's not a lot of wiggle room there. If you're in another industry, like I have engineering clients that will go off on some far-flung assignment, they get premium taxable plus the per diems. And you'll find that with the traveling physicians or nurse practitioners or CRNAs. They get a much higher taxable plus the reimbursements. Unfortunately, for those of us, like when I was a respiratory therapist, nursing, that bill rate to permanent staff rate is not that much different. So it has to be broken down. And this is why often the taxable part of our compensation is typically less than what you will have as a permanent staff. That's just the mechanics of the math. And you would say, well, I'm not getting paid as much, but like I said before, the way to make money in the industry is you take that tax-free part, assuming you qualify, and live a little bit more frugally. Or have a travel buddy. If you're traveling with spouses, is incredible because then they can both get a per diem, combine it, and pay for their lodging. So if you have a travel buddy, you can do the same thing. Share lodging on the road with somebody else, or you can even do that for your permanent home to help save the cost. Another one, last one for me. You promise? Could you explain that the 24-month time period work stretch, as in how much time you need to be at your tax home in order for it not to come into question? In 24 months, you should be there for 60 days, consecutive or non-consecutive. Would it be better, tax advantage, to pay myself as a W-2 in my LLC instead of just a 1099? That's a bit of a more involved question. If you are a single member LLC, you're not supposed to pay yourself a W-2. You're taxed on all the net, regardless of whether you take it out of your bank account or not. If your LLC elects S Corp status, then we will go W-2. And yes, there are some advantages, and you may want to connect with us for a consult and go over a lot of the ins and outs about that.
We have a few more in the Q and A part too.
Yeah. go up to the top. There's actually 3 of them. 1099 contractor and putting in money aside, pay taxes on these monies for April. Will I be penalized for not paying quarterly? You could, well, this applies whether you're 1099 or not. If you have to pay IRS, states, whatever, typically if you owe a lot, they're going to charge you an interest penalty for not paying it during the year. How do they compute that? They assume that you're going to pay your taxes as you go. So if you owe $2,000 for this, without worrying about how the months are broken down, if you owe $2,000, they'll assume you should have paid $500 by April, $500 by June, $500 by September, $500 by December. So they'll charge an interest based on that. There are other exceptions to that, but that's sort of the big picture. So whether it's 1099 or an employee, that can happen. What are the best ways that you are visiting, or to prove you're visiting at your home 30 days a year? You have a camera, you have a cell phone, you have a camera on your cell phone. There was some really crazy tax case involving a guy that New York City was trying to pin him down and living there. And every morning he'd take a camera shot of the Philadelphia Inquirer behind a cheesesteak business. So he could prove that cheesesteaks aren't as rampant in New York City as they are in Philadelphia. But he won his case because he was doing that. Gas receipts, there's always going to be something you can show. And typically that's going to happen in between contracts. So that's one of the many ways. The other one, if a facility is within 50 miles, like 45 miles, but it's a big traffic area like Los Angeles, can I still get the stipend so that I can get temp lodging? Well, the answer to that is yes. And one thing to say about the stipend, generally you're getting a stipend for 7 days a week. If you stay in a hotel 3 nights, go home, 4/7 of that is taxable. But let's just assume you get lodging there 7 days a week and it's only 40 miles away, 45. Absolutely. And that happens in a lot of places like that, New York City, and especially New York City might be a little easier because you can hop on the subway and go home. But you don't have that kind of flexibility in a lot of the cities in the West and the South. But yeah, you can do that. Now, whether the agency might balk at it because they have a very firm 50-mile rule, that's another question. But from a purely tax law perspective, yeah, you can do that. Back in the chat room. Okay, just a comment about the
I think we have
question or
one
answer.
more that came through at the last second. Sorry, it's do most
Q.
agencies take into account if my spouse is also a traveling professional? Will they likely offer a smaller housing stipend knowing we will get to combine our profits?
Typically, no. Typically, they're just going to deal with you as individuals, even though they may know that you're going to want to work in the same area. Now, keep in mind the dynamics of a bill rate. St. Yahoo's hospital in Seattle or whatever might say, I need 10 nurses now. But for the first 5, because they need them so fast, they're going to pay a bill rate of 100 an hour. But the other 5 can sort of come in a little later and they're only going to pay 90 an hour. You may have those dynamics thrown in there if your spouse is the number 6 and you're the number 5. That you're going to have those matrices everywhere you go, but generally you're going to get about the same. They're not going to. There's an advantage for the agency giving you a tax-free reimbursement because it's not subject to payroll tax. So they'll be more inclined to keep those two consistent, assuming you're in the same profession as well too. There's another one over in the Q&A.
Really?
I asked mine before the
Oh yeah.
seminar when I signed up. Well, what is that one?
We actually already answered it, so that's why I just said thank you. I looked back and saw she
Okay,
did end
there
up
we
asking it.
go.
Yeah. And correct me if I'm wrong, Debbie, but I saw that you did ask it. Okay, this is the last one, guys. We want to be mindful of everybody's time. Tori, I see you got it in, so we will answer it.
Oh, there's new questions. Oh, okay. Must you pay to maintain your tax home year round? For example, you're paying rent for a family of 12 months. Was acceptable to pay and duplicate while you're away from assignment. If you do that and you're in an audit, they're going to say, are you really keeping a home? Because that's the whole point of it. You have a home that you've been maintaining, and now you're doing temporary jobs. You're not going to give up that home. So, better to just keep paying it because it's supposed to be your home. And hey, we owe our parents a lot of money. My youngest lives with me. He pays me $300 a month, which is very, very cheap. Uh, but, we can always give back.
Well, I love it. I love it. Thank you guys so much for joining us today. Thank you, Joseph, just for answering everybody's questions. I will be making sure that we email you in the next few days with the recording, the slides, and all this information. I will also be linking Joseph's information, Travel Tax's website, and everything so you guys can get into contact with him, as well as we will be offering, thank you, Travel Tax, we will be offering a discount code to all of you all today. So be sure to just wait for that email so then you can get that discount code for the consult that he was referring to. We appreciate you guys so much for coming tonight. And if you have any other questions, concerns, let us know. We will be sending out a feedback form. So please fill that out so we can just make things better. If there's another topic that you want to hear, you want to see Joseph come back and talk more about taxes, we'd be happy to have him back. So yes, we just want to thank you guys so much. Thank you, Joseph, for lending us your time, and please let us know if you all need anything else. And have a wonderful night.
Thank you.
I'm sorry, Carla, you've been filing with them for years. It's great that you've been doing that. Maybe we could offline and I could see if they could offer you that if you haven't filed yet. Maybe that's the question, Carla. But I'm glad that you are a happy customer. Yeah, I'll reach out to them and see what we can do for you. Okay. So thank you for joining us tonight. You guys have a great night.